Investors toasted the latest earnings report from Constellation Brands. The maker of household name beers such as Corona and Modelo beat quarterly revenue estimates primarily on strong sales of those beer brands. The company said strength in beer will continue this year as bars and restaurants rebuild from the pandemic. Constellation added it will repurchase another $500 million in stock this quarter after buying back $523 million in the first quarter. Joining us now is Constellation Brands President and CEO Bill Newlands. Bill, good to see you ahead of a long weekend of, I'm sure, a couple drinks here. Let me start here. I got a good report in my box email just now from Goldman Sachs. They're saying on-premise draft beer trends continue to improve, but overall volume is still below pre-COVID levels. When do you think that your business gets back to those pre-COVID levels?
We're very excited of how it's gone so far. Our depletions in our first quarter in the on-premise was up 250% versus last year. So, on the surface, you think that's fantastic. But you also realize that it was only 11% of our business. Before the pandemic, that channel was 15% of our business. So we still think there's a long way to go and a lot of opportunity as people begin to get out and really decide how they're going to engage and in what channels they're going to make their purchases.
Bill, we talked a little bit on this program the other day about the Seltzer market, and you had some really interesting commentary about the dynamics you see there that ultimately you think only a couple of major players are going to be long-term winners there, and you're hoping to be one of the top three brands. What have you guys seen just as we get into the summer and really the heart of what's become the Seltzer season over the last few years?
Well, we still see that as a big growth driver in the high-end part of the beer business. And our business is doing very well. As you know, we did 10 million cases in our first year with literally one SKU. We've just introduced a second variety pack, which is doing very well. It's almost half the size of the first variety pack already. And we just introduced Limonada here in the last few weeks. And we're very excited about that product. So we think the seltzer business is going to continue to be a growth driver, probably not at the accelerated levels that it has in prior years, but it can still see 30, 40, 50% growth this year, which will be very healthy.
Bill, do you think there will be a hard seltzer shakeout? I'll use me as an example. I go over to my local convenience store. I mean, the shelves are overrun with choices by some brands I've never even heard of. What's the end game here?
We do think that'll happen, much like the light beer category, where you see a few to several critical brands that tend to be the strong players. We think that's going to happen in seltzer as well. And we certainly expect to be there with our Corona Hard Seltzer.
And certainly within the beer category, let's talk a little bit about what you guys have seen there for the continued kind of at-home trends that went on during the pandemic. Certainly a lot more people were buying a lot more, consuming a lot more at home out of necessity. But have you guys seen follow through on people changing their habits? Given even new options to be able to go out again, but people realize, hey, having a couple of buddies over is actually maybe preferable, certainly cheaper than heading out to a restaurant or bar.
It can be. Certainly, we're seeing a lot of change of how people buy. So even though that they may be buying at home, they might be doing it by three-tier e-commerce or click and collect or Instacart or some of these alternate ways for people to get a hold of product. How all those channels mix together as we're coming out of the pandemic, I think is going to be one of the more interesting things. We've been waiting for many, many years to see an increase in some of these direct-to-consumer style purchasing scenarios, and we finally saw it around the pandemic. Fortunately, our company invested heavily against this. In our wine business, we were up 45% versus last year in the direct-to-consumer space, which, considering the consumer had gone to that space pretty aggressively, we think that's really here to stay.
You highlighted on the earnings call, Bill, supply chain challenges. What are some of those challenges you're dealing with now? I guess as you try to help restaurants, bars rebuild their stock.
The biggest single thing that we had is when the power grid in northern Mexico and Texas had a challenge at the end of February, it gave us a limited window where we had a challenge of producing product. That's really our only issue. Frankly, the biggest challenge, and this is a good one, is demand is just through the roof. Our business is extremely strong. We saw a double-digit growth profile in our beer business. And that's really the biggest thing that's made inventory just a bit tighter than we'd like to see. We're working aggressively with our partners and our distributors to make sure that we're able to fulfill, but it's going to be a little tight over the course of the next several months.
Bill, this is certainly like, let's call it inventory adjacent, but you guys talked about, let me get the term here, smoke-tainted bulk wine sales during the most recent quarter. Can you, I read it and I was trying to figure out exactly what happened and how that fits in. Can you just outline for us a little bit of just what that part of the business or how that became something that came up on the call?
Well, as you probably know, last year there were wildfires in California and smoke settled into some of the areas where there was a lot of grapes being grown. So what that does is that creates smoke taint in the wine. And obviously, we do not make wine out of anything that doesn't meet the quality standards that we have for our products. So what that simply referred to is we sold some of that bulk wine that did not meet the standard that we would expect to go into our exceptional brands.
Bill, we've seen a lot of inflation. Have you been able to increase your prices this year?
We're in our beer business looking at 1% to 2%. That's pretty consistent with what we do on an annualized basis. Certainly, we're watching inflation, but we also hedge ourselves pretty well. We assumed that inflation would be up a few points this year, and we built that into our planning cycle. But we're pretty well hedged, so we think we're in a pretty good spot. And you always have to be careful in raising your price. You don't want to get ahead of the consumer. And that's what we're watching very carefully. But certainly we expect to do what we traditionally do, which is in that 1% to 2% range.
And are you still on pace to repurchase of about $2.5 billion of your stock, through fiscal 2023?
23, correct. One of the beauties of our business being high growth, high cash flow is we can not only invest for the future growth that we expect around our portfolio, but we can also buy back stock. And by the time we're done with another 3 or 4 months, we'll have $1 billion against our $5 billion commitment, as you point out, half of which is in stock repurchases by the end of fiscal 23.
You have a wide selection, Bill. What's your beer of choice this July 4th weekend?
I got to say, I got to have a Negra Modelo. I love the full flavor of Negra Modelo. It's one of my favorites. But, you got to be careful. You got to love all your children. So I may be more flexible than that.
Well, I'll give you some love. I'm a Corona Premier guy here myself. All right, well, have a good, safe, long week. And Constellation Brands President and CEO Bill Newlands. We'll talk to you soon.
Thanks very much.